Shares of Kroger getting hammered this morning. The supermarket chain reporting earnings and revenue that fell short of analyst expectations. Fiscal fourth quarter net income coming in at $259 million, down from $854 a year earlier. Did talk this morning to the CFO, Mike Schlotman, about the weakness in the shares. They say they're actually pleased with the results. Schlotman says fourth quarter was better than the third quarter. The same store sales at 2% was better than the market expected. He said we've got momentum into 2019, and so far this quarter, sales are coming in strong, as expected. I asked him about the pretty sharp negative reaction. He said the market trades off headlines, does not dig into the numbers. Now, one number that was fairly disappointing, the operating margin, he said the weakness there came from a few factors: pricing, which they had to take, and investments. This is a company that is in a transition, investing in digital efforts like warehouses with their new partnership with the UK's Ocado. I also asked him about Amazon's new plans, as reported first by the Wall Street Journal, to set up grocery stores, not just Whole Foods. He says that validates our model. And when it comes to Amazon, he said it's going to take them a lot longer to build out physical locations than it's going to take us to build out a digital framework. This is the message you're getting from Kroger. The top line numbers, Carl, no question, were weaker than expected, and that was a big disappointment. But if you look at a number like digital, their sales there rose 58%. The company says delivery or pickup is available in 90% of their stores. The market's not buying this narrative. I mean, they're buying it when it comes to Target. They're buying it when it comes to Walmart. They aren't buying it when it comes to Kroger. And I think the reason is the environment is so sensitive around the grocers, with heavyweights like Walmart and Amazon making such a big priority and push into their business, and that's why you get this kind of sharp negative reaction that you do.
Industry's famous for having thin margins anyway, so gross margin going down is scary. And Cramer's point this morning was really their best hope is if Amazon is distracted with some other bauble that keeps them from focusing directly on grocery and destroying them in the process.
I think their best hope is that they already have the physical infrastructure. They consider themselves way ahead of Amazon on this front, and they're moving fast to try to build out warehouses in the U.S. and digital efforts and partnerships. They've been investing with Walgreens, for instance, with Microsoft on all of these efforts, and they're just trying to be able to tell the story to Wall Street in a way that's positive, and they're not getting there yet. As far as fundamentals in the grocery business, they say nothing's changed. I mean, things are looking better than expected, and their results in this transition, first year out of the next three, they think are better than expected.